Welcome back. Mortgage rates plunged last week. So get this, last week was actually the biggest decrease in rates we've seen going back to July of 2022. Also, the huge decline in rates we saw from Wednesday last week through Friday was one of the biggest decreases we've seen in the last decade, according to the Mortgage News Daily. So as such, it makes sense that applications for home loans for refis plus purchases actually increased last week. So in today's video, I'll share all the details, but also share some more early indications of home buying demand because home tours last week fell big time. This will give us some indication what lies ahead with the US housing market. And by the way, if you guys are new here, I invite you to subscribe to this channel right now because I post frequent housing market updates so you guys can make a more informed decision whether to buy or sell a house based on the latest data we have today. So thank you so much for doing that. Help me reach 100,000 subscribers by year end. So I have a lot to share in today's video. Let's begin. So here's a latest report from the Mortgage Bankers Association, or the MBA, just posted today, which is November 8th. It says applications increased by 2.5% compared to the previous week. This is for the week ended November 3rd. So total applications obviously includes refis, but also for people looking to get a loan to buy a house. So let's first talk about the refi index because the refi index increased by 2% compared to the previous week. And also it's down by 7% compared to 1 year ago. I actually looked at this report from 1 year ago and refis actually fell by more than 85% compared to the previous year. Now we're only down by 7%, but still at very, very low levels. Now, speaking of low levels, let's talk about the purchase index. Their purchase index from the MBA is a measure of the amount of people submitting loan applications to buy houses that actually increased by 3% compared to the previous week, but still down by 20% from 1 year ago. However, based on my analysis here, even though applications increased by 3% compared to the previous week, it's more or less on par with the lowest levels going back to February of 1995. According to Joel Kahn, who's the MBA's deputy chief economist, he stated the following: the 30-year fixed mortgage rate dropped by 25 basis points to 7.61%, the largest single week decrease since July of 2022. Now, something you guys should be aware of is that rates have been decreasing over the past several weeks here. But when looking at rates 1 week ago, rates were at 7.86%. Again, this is average rates nationwide for home purchases for people with exceptional credit. And now the average is at 7.61%. So, however, despite this increase though, rates are still on par with the highest levels since November of 2000. So here's a look at that right here. Look at this sharp increase. I mean, we haven't seen anything like this ever really. Going back to December of 2020, the average rate according to the MBA was at 2.89%. Now it's at 7.61%. That is the highest levels we've seen going back to approximately November of 2000. Now, zooming in over the past 1 year, it's still lower than the past several weeks here because at 7.6%, that's actually the lowest levels since approximately October 4th this year. But historically speaking, over the past 2 decades here, we're still at very high rates, especially when you count the fact that home prices overall have not decreased very much this year. Not too far off the all-time record highs that was set late last year. Going back to the MBA's report here, it says last week's decrease in rates was driven by the US Treasury's issuance update, the Fed striking a more dovish tone in their November FOMC meeting. The Fed FOMC actually meets approximately every 8 weeks or so, and they discuss the changes to the federal funds rate. That's the only rate that the Fed controls, but that has an indirect relationship regarding mortgage rates. So when the federal funds rate goes up, mortgage rates tend to go up as well here. In any case, the decrease in rates was also due to data indicating a slower job market as well, as I reported you guys in my video from yesterday. Applications for both purchases and refi loans were up compared to a week ago, but remained at low levels. The purchase index is still more than 20% behind last year's pace, as many home buyers remain on the sidelines waiting for more houses to be for sale and also for houses to be more affordable as well, is what I would add there. So anyways, here's something that I'm also going to mention in my next video with you guys, because this is something that just kind of blows my mind, is that even though we're at these high prices and rates, the amount of refi applications still remains relatively high. So 3 of every 10 applications for home loans is actually for a refi here. So the refinance share of activity, this is all applications for home loans, was at 31.4%. That's an increase from the 31.2% we saw in the previous week. Also, my video I posted yesterday as well, I mentioned that 90% of people doing a refi is a cash out refi, and they're taking on a higher rate. This is could be due to a variety of factors, but one potential reason may be due to the fact that we have all-time record highs for the amount of credit card balances right now, and the average rate on that is around 20 to 22%. So maybe some people are refinancing their mortgages and getting cash out to pay down their credit card balances. But again, I'll make a video. I plan to make a video this later today as well. So I'll definitely keep you posted with that regarding some advice for people as well here. In any case, according to the MBA here as well, the share of people using adjustable rate mortgages or ARMs still remains relatively high as well, even though it decreased last week to 9.8% of total applications. So I did some digging for you guys, because in their previous report 1 week ago, the share of ARMs was at 10.7%. Now it's at 9.8%. Also, I did some more digging as well. I looked at the report from 1 year ago in November 2022. Back then, the share of ARMs was at 12%. Now, you may be asking yourself, why are people using adjustable rate mortgages right now, at least for applying for loans? And the reason is this right here. The rate tends to be lower for an ARM versus a 30-year fix. So the average rate last week, according to the MBA, for loan balances less than $726,200 was at 7.61%. However, for a 5/1 ARM though, it was at 6.76%. So you get a rate about 1 percentage point less for a 5/1 ARM compared to a 30-year fix. Obviously, for a 30-year fix, your principal and interest payment is fixed for 30 years. For a 5/1 ARM, it's only fixed for 5 years, then it becomes variable thereafter, and it adjusts to current rates every year thereafter. And therefore, because of that, that is a much riskier loan product than a 30-year fix, for example. One more thing I do want to mention regarding ARMs is that the spread between a 30-year fix versus a 5/1 ARM is about 80 basis points or 0.8 percentage points. Now, here's a report from 1 year ago, because the spread was actually at 130 basis points. So the average rate 1 year ago for a 30-year fix was at 7.14%, for a 5/1 ARM at 5.87%, a spread of 1.3 percentage points compared to a spread right now at 0.8 percentage points. This is one reason why the share of applications for ARMs was a little bit higher last year compared to this year. Okay, let's change gears slightly here and talk about some more early indications of home buying demand. And let's first talk about the number of people searching for homes for sale on Google. If you actually just go to Google Trends, you can search for any search term here. When we search for homes for sale, that actually is higher right now compared to a year ago, which is a fairly big change though, because I've been reporting to you guys that the number of people searching for homes for sale on Google was below levels in 2022. Now it's actually a little bit higher. So the index for that for the week ended November 4th is at 70. 1 year ago, it was at 67. Now, when looking at the number of real estate showings across North America, this is an entirely different story here. A very big change last week. This covers the 7 days ended November 6th this year. Look what happened last week here, big decrease. So for the most recent stats we have here, this year, the number of real estate showings, this is real estate agents showing houses that are for sale to their home buyers, fell by 29.7% compared to the first week this year. Last year, it was a decrease of also 29.7% compared to the first week last year versus a 3.7% gain we saw in 2021. Now, this is a big change though, because just about a few days ago here, let's just call it actually the previous day, we saw a decrease of 20% this year, but a 30% decrease last year. Now is actually the same decline at 29.7%, a huge decrease of real estate showings last week. I also want to give you guys an update regarding average rates according to the Mortgage News Daily and also Investopedia.com. So according to the Mortgage News Daily, the average daily rate for a 30-year fix, this, by the way, is for people with exceptional credit buying a primary residence and also putting at least 20% down. That's at 7.41%. For a jumbo is at 7.80%. FHA and VA loans are around 6.8%. When looking at rates 1 year ago, the daily rate was at 7.21%. That's an increase of 0.2 percentage points or 20 basis points higher compared to 12 months ago. Now, something I want to mention though, is that at 7.41%, this is much lower compared to the daily rate we saw about 3 weeks ago when we were at 8.03%. So around 60 basis points less than 3 weeks ago. However, at 7.41%, this is still on par with the highest levels since late 2000. For example, back in November of 2000, the average rate was at 7.75%. So big picture here, despite the decrease in rates we've seen ever since the highs we saw from 3 weeks ago, we're still at very high levels, historically speaking, over the past 20 years here, especially when you account for the fact that home prices have not fallen very much as well. Now, when looking at daily rates according to Investopedia.com, they're looking at a daily rate at 7.93%. They actually look at a wider range of FICO scores going down to 700. Therefore, their rates that they quote on their website tend to be a little bit higher compared to other websites. With that said, please comment below with your biggest takeaways from today's video. Also, check out that link below if you guys want a real estate agent referral, or go to realestateteamfinder.com. Hope you guys have an awesome day. Like and subscribe, and we'll see you on the next video.